What is going on, everybody? Josh here, man. I'm hoping y'all are having a great day. In today's video, I'm going to be explaining session liquidity, what it is, how to look for it, and that's about it, guys. If you're new to the channel, please hit that like and subscribe button. It does help the algorithms, and I appreciate it very much, guys. Okay, let's dive right into it. Stock market session liquidity. What is it? So let's define it first. So session liquidity refers to the price levels where a large amount of pending sell orders are placed by long biased traders as their stop loss to close out their long positions. These sell stops are typically positioned below key levels such as lows of the previous day, the previous week, or the month. The session liquidity trading view indicator creates dynamic horizontal lines at the highs and the low points of a specific time span within the trading day. The London session and kill zone are also important for traders due to their liquidity and volatility. Alright, so now that we have that in our memory bank, right? So session liquidity refers to the price levels where large amounts of pending sell orders are placed. Alright, so trading view. So these are the different sessions. So currently this is live. You can see right now the NASDAQ is running, I think it's what, negative 13 points on the day. So session liquidity. So this is the New York AM session. Before that, we have the London session, then we have the Asia session, then we have New York PM, which was yesterday, New York lunch, New York AM, London, Asia, so on and so on, right? So these are your different sessions. And you can see the lines from each session. So this is Asia's high, which is this blue line. We have Asia's low, which is this line. We have a New York AM low, which is going to be your green line. We have London. So this is all session liquidity, the highs and the lows of each session. Now you can see this purple line, so let's see what high that is. That's yesterday's New York PM session high, and then above it, the green line, which is the New York AM session high. So we can see London right here. Then nothing happens, we just have basic people are trading, I'm assuming. And then when the New York session AM opens, what does it do? It takes out all of this liquidity, session liquidity. Then what did it do? It took out Asia's highs session liquidity. So now my assumption is going to be, since it took out London, Asia, I'm assuming it's going to come up to the price of 21,886, which is New York PM session liquidity. Now, this is not financial advice. I'm just assuming, since we took out this liquidity, we took out this liquidity, we took out New York lunchtime's low liquidity. So guess what? We are headed to, my assumption is going to be, the New York PM session liquidity. So that's going to be the price of 21,886. So let's go to my trade of 8 chart and draw a line at 21,886. There we go. Boom. So now these are 15-minute candles, y'all. So that was the high right here. This was yesterday's New York's, what was it? New York PM's low. Alright, so now we're coming up to New York PM's high. So that's where we are going to shoot forward to. I will hop into a long position here with a micro.
Order filled.
And put a stop at 886. Because I'm assuming that's where it's going to. Actually, I'm going to sell it a little bit lower than that. Alright. So I'm in with 1 micro on the NASDAQ, and let's hopefully that it does what I think it's going to do and try to go to 886. So I have my stop at 874 just to be safe, because who knows, it may not go exactly to 886, 21,886. It might go a little bit below it, but the vast majority of that liquidity has gotten filled, right? It's not an exact science. It's not going to go exactly to the T and then break. It could go 10, 20 points below it, which it's still filling most of the upwards portion of all of this liquidity. And then guess what the market makers do? They're going to dump, and then they're going to try to fill back all this liquidity, or who knows what's going to happen, right? It's all assumptions until it actually happens. But just know that these market makers, these big hedge funds, that's what they look for. They look for highs and lows of different sessions in the previous history, right? Prior histories, prior days, to figure out where they want to go to next, or they could just push it up and make newer highs, right? So we're just playing their game, right? We're not making the market move. It's the market makers, it's the hedge funds, it's the multi-billion-dollar businesses that make these markets move, and they have key price points, right? These are all their price points. We as retail traders are just trying to figure out where their price points are at. That's all we're doing. So with that being said, guys, I'm going to end this video here. I don't want to waste any more of your time. Like once I said, this is not financial advice. This is just my own personal opinion. And if you are new to the channel, please hit that like and subscribe. It does help the algorithms. And the reason I'm not showing my face is because I don't have any clothes on. I had an accident with my dryer, so my dryer's not working. So I'm actually waiting for the new dryer to be delivered today. So I'm air drying my clothes out like we did old school, right? Remember when we were in I'm 38, so when I was in my 10s, 15s, my grandparents made us put our clothes on the racks outside. You hang them on the clothes hanger, on the clothesline, right? So this brought me back to those old times, guys. But anyway, y'all have a great day. Have a safe trading day, and I appreciate y'all stopping in, and I'll see y'all later, guys. Peace.